Welcome to Stony Brook Finance Lab channel.
Thank you for listening to this video presentation by Lucia Lee, Heesoo Pyun, and Jessica Reed. Next. For the purposes of this video, the investment portfolio is meant to address current graduating students who are entering into the workforce and are wanting to make strides towards having a down payment for a home. Given that we're Stony Brook University students, this strategy is intended to reach 20% of the $641,253 average home price in Stony Brook, Long Island, which would be $128,250.60. Additionally, this portfolio is assuming that the person will be placing an initial investment of $1,250. Next.
We'll explain background research, market analysis, and ETF sector analysis for the background. Next. According to our background research, the U.S. government issues large sums of money to society due to COVID-19. As a result, the inflation has risen sharply. Also, both inflation and Russia-Ukraine war led to an increasing price of commodity prices. Europe has decided that it should no longer depend on Russia for its energy supply due to the Russia-Ukraine war. As a result, U.S. energy prices have risen in the long run. Next. U.S. inflation has risen significantly since 2020 due to the COVID-19 and is still rising in 2022 according to the Journal of Bloomberg Economy. Energy is one of the consumer necessities essential to life. As a result, energy prices are also rising significantly. Next. The Bowl Index declined through 2021. The Russia-Ukraine war will significantly increase EU demand for U.S. natural gas. So in the long run, the price of oil will continue to rise at least as much as its value in 2019. Next. To analyze DBE ETF, the index hit its lowest point in early 2020 as the oil supply chain has been weakened by COVID-19. Although 2020 is the best time to invest in this ETF, it is still attractive due to its future growth potential and European demand. Next. We analyze two sectors, which is energy and technology. According to sector SPDR, energy ETF prices rose faster, but technology ETF gradually declined in value since 2022 due to the inflation. However, at the end of the inflation period, the value of the technology ETF will grow higher than the value of the energy ETF. Next. We consider ETF as candidate for investment vehicle. ETFs are recommended for small investment funds, while index funds need more investment funds that we cannot provide. The characteristic of ETF is high risk and high return. Therefore, ETFs are more attractive to us if we can offer the risk. Next. So we consider DBE, BULL, and SLK as our investment vehicles. DBE is a short-term investment vehicle, while BULL and SLK are long-term investment vehicles. Next.
So our first strategy is to focus on allocating a portion of a portfolio to different asset categories for diversification. The low investment threshold for most ETFs makes it easy for a beginner to implement a basic asset allocation strategy depending on their investment time horizon and risk tolerance. For our case, we set our investment horizon into 3 years, and we will make investors to diversify their investment to invest 40% in XOK, 40% in DBE, 20% in BOIL. As they embark on major life cycle changes such as starting a family and buying a house, this less aggressive investment mix will protect their money, which is better for the long-term investment plan. For the specific monthly plan, we will follow the swing trading method. Swing trades are trades that seek to take advantage of sizable swings in stocks. They can take anywhere from a few days to a few weeks to work out, unlike day trades, which are seldom left open overnight. The attributes of ETFs that make them suitable for swing trading are their diversification and tight bid-ask spreads. Because ETFs are typically baskets of stocks or other assets, they may not exhibit the same degree of upward price movement as a single stock in a bull market. By the same token, their diversification also makes them less susceptible than single stocks to a big downward move. This provides them protection against capital erosion, which is an important consideration for beginners. To be specific, this is the candle chart of XOK. We shall hold it in the yellow area, upturn, and sell it before the red area, downturn comes. As swing trading usually possesses the securities more than 1 day but less than 2 weeks, we will repeat this buying and selling pattern based on the changing trends by observing these candlestick charts. Same way will be applied to DBE and BOIL too.
Now we'll discuss an analysis of the risk and return and some mistakes to avoid. Next. As part of the analysis of the return, it's important to understand that DBE has an incredible year-to-date return of 40.05% and a one-year daily total return of 82.26%. Next. Some key measurements that can help understand DBE's risk include the standard deviation, which measures the ETF's volatility. The standard deviation is quite high at 33.85. Additionally, the Sharpe ratio is essentially a risk to return ratio. We want a positive Sharpe ratio, which is the case for this ETF, as it has a Sharpe ratio of 0.67. Next. This graph shows that the price of the BOIL ETF can fluctuate quite a lot, with there being a large dip in December 2021 and January 2022. Since we expect to engage in swing trading, these large dips can be quite advantageous for our strategy, as there are opportunities to buy at low values and sell at high ones. Next. Unfortunately, it is not entirely clear the measurements that would be determining the risk for XLK, as there is insufficient investment history. Next. Our strategy assumes that initial investments totaling $1250 will be allocated by investing $500 to XLK and DBE and $250 to BOIL. We used a capital gains tax of 22% for the cash flow, since this is the income tax for people making an average starting salary of $55,260 for college graduates. We did a historical analysis where we bought shares during a downturn and sold shares during an upturn for 3 years. For XLK and DBE, all profits were reinvested into buying more shares of the ETFs. However, BOIL had quarterly dividends taken out, which took out half of the cash flow resulting from a sale around each August, November, February, and May 5th. Our historical analysis with perfect information shows that it's still possible to reach our goal as our total profit excluding dividends is over $258,000, which is much higher than our goal of around $128,300. Next. If you'd like to learn more on how we calculated this, please scan this QR code for the Google Sheet. Next. Some tips for success include paying attention to market shifts and any new laws. For example, BOIL is tied to natural gas. Natural gas requires fracking, and if it became illegal to frack, it would completely tank this ETF. Do not also invest too much and have an emergency fund with 3 to 6 months worth of expenses. Also, remember that after every sale in which you make a profit, you'll be subject to capital gains tax, so don't sell for very minimal profits. Lastly, control your emotions. Fear and greed cause many investors to buy when there are market tops and sell at market lows. And since we're trying to do the exact opposite, please do not follow those inclinations. Next.
To summarize, according to Shen News, Europe sets 2027 deadline to end reliance on Russian oil and gas. We plan to invest with an active investment strategy in the short term while energy ETFs maintain an upward trend. Therefore, we established our strategy to reduce the risk of loss by diversifying investment in ETFs that have the opposite characteristic of energy ETFs and technology ETF. Next. So these are the references that we use for the presentations. And thank you so much for your interest and attention.
Thank you for watching this video. Please feel free to like, comment, and subscribe to this YouTube channel.